have a look at the increase. That is 547,000 barrels a day starting in September. Do you think that will be a huge impact on pricing and global supplies?
Good afternoon. I'm glad to be here. No, I don't think so, because it doesn't really come as a surprise. Or to be more precise, this is the last of several tranches to dial back a previous output cut. And the speed with which the previous total output cut was dialed back, that came as a surprise, but started already in April. So this is the last step in a bigger journey, and that last step was by now expected. And price impact is therefore most likely to be very moderate.
The group says the decision is based on strong economic conditions and low oil inventory. So from your perspective, are these the real drivers, or is geopolitics playing a bigger role?
Well, if you talk about oil prices in oil markets, you always hear it's demand, supply, short-term things. It's too much economic growth, not enough economic growth. Too much storage in China, not enough storage in China. I think there is something new now, which we hear in this litany of words, which is that they say that OPEC is gearing up for having a higher market share. And that, I think, is something which is qualitatively new, but people haven't really gotten their head around what it means. Why would an oil producer suddenly lower prices and risk prices globally to be much lower just in order to gain market share? And the answer is probably because he expects something different from the rest of the market, or he knows something different from the rest of the market. And what is this? In my view, it is the expectation that oil demand growth will slow, plateau, or stop, that we reach peak oil demand in the next few years, and that OPEC wants to be prepared. When you have a shrinking market or a stable market, then if you are a producer, in order just to sell the same volume year after year into that market, by definition, you need to increase your market share if the market shrinks. And how do you do that? You do this by price competition. At the start of such a process, you don't want to be caught out in a situation with a lot of spare capacity. And OPEC, after previous cuts, had a lot of spare capacity. So that's what they're preparing. That's what behind this phrase of market share gain. They are preparing for a time when oil demand in the longer term will stay stable, plateau, or even decline.
Let's talk about geopolitics. Let's talk about the US. Could this production increase make it harder for the US to use oil sanctions as leverage against Russia in the Ukraine conflict, do you think?
No, I think the opposite. I think it makes it easier. Mm-hmm. The more oil there is on the market and the less pressure there is on prices, the easier it is for the US to impose sanctions on others. Don't forget that the US and Trump want low oil prices. The president has been very clear on that. And now if you suddenly would impose sanctions, for example, on Russia, or tighter sanctions on Venezuela and Iran, and the market would be as before, the natural reaction would be for oil prices to get up and markets get nervous. So OPEC, by increasing production now, plays into the cards of the American president and makes these kind of activities easier to sustain for him.
Oh, thank you very much for your insights. That is Christof Ruehl, a senior research scholar from Columbia University.